On April 26, 2019, Chevron reported first quarter financial results for the period ending March 31st. This video provides an update on the company's dividend safety using its most recent operating results. Before we begin, I invite you to subscribe to this channel and like this video, which will help more people discover Sure Dividend's investor education efforts. With that out of the way, let's dig into Chevron's dividend safety. To begin, let's talk about Chevron's business model. Chevron is one of the world's largest oil companies. The company is engaged in upstream oil and gas production, as well as operating a downstream refining business. Chevron has a market capitalization of $231 billion, with annual revenues of nearly $176 billion. Chevron is one of the world's most popular dividend growth stocks. The company's current dividend yield is 3.9%. Moreover, Chevron is a consistent dividend grower. In fact, the company has increased its annual dividend payment for 32 consecutive years. Because of this, Chevron qualifies to be a member of the Dividend Aristocrats, an exclusive group of dividend stocks with more than 25 years of consecutive dividend increases. Looking ahead, investors interested in owning Chevron stock will likely be interested in the safety of the company's dividend payment. For the remainder of this video, we will discuss Chevron's dividend safety from four perspectives: its dividend safety in the context of its current earnings, its dividend safety in the context of its current free cash flow, its dividend safety in the context of its recession performance, and its dividend safety in the context of its current debt load. First, let's discuss Chevron's dividend safety in the context of the company's current earnings. In the first quarter of fiscal 2019, Chevron generated adjusted earnings per share of $1.47, which compared unfavorably to the $1.90 of adjusted earnings per share in the same period a year ago. For context, Chevron currently pays a quarterly dividend of $1.19 per share, which implies a payout ratio of 81% in the most recent quarter. Looking out over a longer time horizon, the payout ratio is much lower. Chevron generated $7.74 of adjusted earnings per share in fiscal 2018. The company distributed $4.48 of common share dividends during the same time period for a dividend payout ratio of 58% in the full fiscal year. Using earnings, Chevron's dividend appears very safe for the foreseeable future. Many analysts believe that comparing a company's dividend payments to its free cash flow is a better method for assessing dividend safety. With that in mind, we will now compare Chevron's current dividend payment to its free cash flow. Chevron generated $5.1 billion of cash flow from operating activities in the first quarter of fiscal 2019 and spent $3 billion on capital expenditures during the same time period for free cash flow of approximately $2.1 billion. The company distributed $2.2 billion of common share dividends during the same time period for a free cash flow dividend payout ratio of 105%. Looking out over a longer time horizon, the payout ratio is significantly lower. Chevron generated $30.6 billion of cash flow from operating activities over the last 12 months and spent $13.7 billion on capital expenditures for free cash flow of $16.9 billion. The company distributed $8.6 billion of common share dividends during the same time period for a free cash flow dividend payout ratio of 51%. Using free cash flow for just the first quarter, Chevron's dividend appears as though it could be at risk for a dividend cut. Using the longer-term view of free cash flow, the company's dividend appears to be much safer, though we encourage investors to monitor this situation closely moving forward. Companies do not cut their dividends in the good times. Instead, dividends are reduced when companies experience financial difficulties. With that in mind, this section will analyze Chevron's current dividend safety in the context of the company's historical recession performance. We believe that the best way to measure a company's recession resiliency is by assessing its earnings per share performance during the financial crisis that occurred between 2007 and 2009. Chevron's performance during this time period is shown here. Chevron's adjusted earnings per share fell 40% during the last recession. Adjusted earnings per share declined by 55% in 2009 alone. The company did not make a new high in adjusted earnings per share until 2011. More importantly, though, the company's earnings still covered its dividend payment, and Chevron continued its multi-decade streak of dividend increases. Because of this, we have little concerns about the company's ability to pay rising dividends during future economic downturns. The last angle that we will use to assess Chevron's current dividend safety is by looking at the company's current debt level. More specifically, we will see how much the company's weighted average interest rate would have to increase before its free cash flow would no longer cover its dividend payment. At the end of the first quarter of fiscal 2019, Chevron had $30.2 billion of total debt outstanding. The company generated $225 million in interest expense in the most recent quarter for a weighted average interest rate of 3.0%. The following image shows how changes to Chevron's weighted average interest rate would impact the company's dividend safety as measured by free cash flow. As you can see, Chevron's weighted average interest rate would have to rise to above the 30.3% level before its dividend would no longer be covered by free cash flow. Because of this, we have little concerns about the impact of the company's debt on Chevron's dividend safety moving forward. Thank you for watching today's video, which performed a deep dive on Chevron's current dividend safety. We invite you to subscribe to this channel and like this video, which will help more people discover SureDividend's investor education efforts. If you're interested in learning more about our systematic approach to dividend growth investing, visit our website at www.suredividend.com.